If a stranger can move just $250 from your account, they don't need to drain you to hurt you. For many seniors, that amount is a grocery week, a prescription refill, or the difference between on-time rent and a late fee. And here's the twist. The thing being called the $250 bank rule can protect you or confuse you, depending on one small detail most people miss. If you get Social Security, a pension, SSI, SSDI, or any steady benefit deposit, this is for you, and it matters before 2026 arrives. Subscribe now so you stay ahead of the next security change before it hits your account. Think of this channel like a lock on the door, not noise in your day. When rules shift or scammers shift tactics, you'll hear it here first, calmly and clearly. That way you're not reacting under pressure when your money is on the line. Let's make this feel safe, because it should. You don't need to be a tech person, and you don't need to memorize policies. You just need a clear game plan for how banks flag unusual moves and how scammers try to weaponize that. By the end, you'll know what's at risk, who's targeted, what to do when a transfer gets questioned, and why staying to the end matters. Because the last part is where that small detail saves people from handing over control by accident. Now, a quick reset before we go deeper. When people say new $250 bank rule confirmed, it can sound like a government cut, a benefit limit, or a new fee. In most real-life cases, what's actually happening is security tightening around certain transactions, often in the low hundreds range. Different banks can implement monitoring in different ways, so you don't want to assume a headline tells the full story. Your job is simple: understand the pattern, then verify the specifics through your bank's official customer service channels. Here's what typically does not change, even when security changes do. Your benefit amount isn't reduced just because monitoring exists. Your deposit schedule usually stays the same unless the benefit program itself changes, and that's a separate notice. And you're not suddenly not allowed to spend your own money. What changes is what happens when something looks unusual right after money lands in your account. Scammers know the rhythm of benefit deposits. They don't need your whole life story. They just need a moment when you're busy or distracted. They try to strike when your balance is higher because you feel a little more breathing room and you're less likely to notice a quick hit. That's why a lot of banks focus extra attention on transfers, withdrawals, and new payees in the hours and days after deposits. Keep that in mind because it explains why $250 can become a tripwire. Let me give you the clear, practical picture. Think of certain dollar amounts as a speed bump, not a wall. When a transfer crosses that speed bump and the pattern looks unfamiliar, the bank's system may pause it, text you, call you, or ask you to confirm. For your normal bills and your usual spending, nothing should feel different. The goal is to slow down the kind of rushed, unfamiliar movement that scams depend on. Here's the open loop I want you to hold on to. The small detail most people miss isn't the dollar amount. It's how you respond when verification shows up, and whether you trust the message or verify it the safe way. We'll come back to that again because it's where scammers try to turn protection into a trap. But first, you need to understand what patterns trigger attention in the first place. Banks don't watch your account the way a person watches a screen all day. Most monitoring is automated and pattern-based. It looks for things like a brand new recipient, a new device, a new location, sudden rapid transfers, or a sudden change in behavior. A single transaction can be fine, but a cluster of fast moves can look like someone trying to empty an account before you notice. That's why small repeated transfers can be just as suspicious as one big one. Quick check-in, because this next part is where confusion starts. When a bank flags something, many people assume they're in trouble. You're not being accused of anything just because a system asks for confirmation. It's closer to a "are you sure" prompt than a punishment. And if it's really you, you should be able to confirm safely and move on. So what does 250 actually mean in day-to-day life? It often shows up as a trigger point for enhanced verification on certain transfers or withdrawals, especially to new destinations. Not every $250 purchase is an issue, and not every bank uses the same exact threshold the same way. But the reason this number keeps showing up is simple. It's big enough to matter, and small enough that scammers can repeat it. They can try $250, then $250 again, then $250 again, hoping you'll overlook it until it's too late. Let's do a real-life example with easy math, and I want you to picture a normal month. Say your Social Security deposit is $1,250, and your must-pay bills total $1,220. That leaves $230 for groceries, gas, and anything unexpected. Now imagine a scammer gets one transfer out for $250 right after your deposit. That's not a little money. That's your entire flexible budget plus $20 more, and the month starts wobbling. Here's the part many people don't say out loud. Even when banks reimburse fraud, it can take time. And time is what you don't have when rent and meds have deadlines. That delay is why prevention matters more than cleanup. This is also why you should treat every unexpected bank alert as potentially real and potentially fake at the same time. Yes, that sounds strange, but it keeps you from reacting the way scammers want. Let's put a myth to bed right now because it spreads fast. Myth: this $250 thing means the bank can stop me from accessing my own benefits whenever they want. Truth: monitoring is usually designed to confirm unusual activity, not block your normal life. If you pay the same landlord, the same utilities, the same insurance, those patterns are familiar. The system gets curious when the destination is new, the timing is weird, and the speed is sudden. Now, attention reset. If you only remember one idea so far, make it this. Scammers don't fear your bank, they fear your pause. They need you to move fast, share information fast, and confirm something fast. Bank monitoring tries to slow things down. Scammers try to make you speed up. And that brings us right back to that small detail most people miss, which is your verification routine. Before we get tactical, let's talk about who this affects most. It affects seniors on fixed incomes, because a few $100s isn't spare, it's stability. It affects anyone who recently switched banks, got a new phone, changed emails, or started using a banking app for the first time. It affects joint accounts where a spouse, adult child, or caregiver also makes transactions, because patterns can shift quickly, and it affects anyone who sends money to family, because new recipients can look new to the system even when they're trusted by you. Do you know what your bank would do if a transfer got flagged today? And would you recognize the real alert from a fake one? Let's walk step by step through the safe way to handle a flagged transaction. First, don't panic and don't rush to fix it by clicking whatever is in front of you. If you get a text, email, or call, assume it could be a scam until you prove it's real. Never share one-time passcodes, security codes, or login details with anyone who contacted you first. Never trust caller ID and never click unknown links, even if the message sounds polite or urgent. Here's the safe routine that keeps you in control. If the message claims to be your bank, you end the interaction and you call back using the official number you already have. That means the number on the back of your debit card or the number on your statement, not the number in the message. When you call, you ask one clear question. Did you place a hold or verification on a transaction today? If it's real, they'll see it. If it's fake, you just dodge the trap. Now we're circling that open loop again with new wording. The overlooked detail isn't whether the bank contacts you. It's whether your bank can reach you at the right phone number and email, and whether you have a clean callback habit. Scammers count on you reacting to the incoming message. Your protection is flipping the direction of contact, so you're the one initiating it. Let's do a second example with simple numbers, because this shows how scams hide in normal life. Say you send your grandson $60 sometimes, and you donate $25 to a local cause once a month. A scammer doesn't start with $1,000 because that screams danger. They might try $240 to a new payment handle, then $260 to another, testing what slips through. 2 transfers at $250-ish is about $500, and that's a car payment, a month of utilities, or several co-pays. And here's a quiet problem heading into 2026. More benefits, pensions, and reimbursements are pushed through direct deposit and digital systems. That convenience is real, but it also means your front door is your account access, your phone, your email, your passwords, your recovery questions. So security updates will keep happening, and the only winning move is to make your habits stronger than the scammer's scripts. You're not powerless here, not even close. Let's talk about common mistakes, kindly, because none of these mean you're careless. One common mistake is treating any bank-branded message as automatically legitimate. Another is calling the number that texted you because it feels faster and official. Another is sharing a one-time code because the caller says, "I'm sending it to verify you," when that code is actually for logging in as you. Another is trying to fix things while emotional because fear makes the brain want instant relief. And another is leaving old phone numbers and emails on file, which can cause you to miss real alerts or let someone else receive them. Here's an attention reset, because we're about to get very practical. If you've ever felt embarrassed asking a bank to repeat something, this is your permission to ask anyway. You're allowed to slow the conversation down. You're allowed to say, "I will call back using the number on my card." Anyone pressuring you to stay on the line is giving you a reason to leave the line. Let's add more mistakes so you can spot them before they cost you. A common slip-up is using the same password across accounts because one leak becomes many problems. Another is ignoring small withdrawals or test transactions because scammers often probe before they strike. Another is letting someone help by taking over your phone during a call because control of the device is control of the account. Another is skipping account alerts because you can't react to what you don't see. And another is keeping large balances sitting in the same account you use for daily spending, making it a bigger target the moment money arrives. Would you rather catch a suspicious $250 move in 2 minutes with an alert, or in 2 weeks on a statement after the damage is done? Now let's do the "if this is you" section, because I want you to recognize your situation immediately. If this is you and your benefits are your main income, you need your account to be predictable and easy to verify. If this is you and you share an account with a spouse or someone helps you pay bills, you need clear rules for who sends money and to whom. If this is you and you recently changed phones, moved or changed email addresses, you need to confirm your bank has the right contact info before a real alert goes to the wrong place. You're not behind, you're just one update away from being safer than most people. Let's widen that "if this is you" lens just a bit more. If you rarely use online banking, then a sudden message about your account can feel foreign and intimidating, and scammers love that gap. If you do use online banking, then fatigue is the danger, because constant logins and codes can make you numb to risk. If you send money to family through payment apps, then new recipients happen more often, and that can trigger verification at inconvenient times. In every case, the fix is the same. Slow down, confirm through official contact, and keep your alerts and contact channels current. Now we pay off the open loop more directly, and I'll say it a new way. The tiny detail that saves people is having a pre-planned verification path. Not "what do I do when I get scared?" but "what do I do every time?" automatically. That plan is what scammers can't compete with, because they rely on surprise. And it's what makes any 250-style monitoring work for you instead of against you. Let's get even more specific about what to verify, without pretending every bank is identical. Ask your bank what types of transactions trigger a confirmation for your account. Ask how they contact you for verification, and what they will never ask you to provide. Ask whether you can set custom alerts for transfers above a dollar amount you choose, like $100 or $200, so you see activity early. And ask what the safest way is to confirm a transaction if you're not using the app. Quick reset, because this is where scammers twist words. A real bank may ask you to confirm that you authorized a transaction. A scammer will ask you to help them stop fraud by giving them the very code that lets them in. A real bank will not demand you stay on the line while you log in. A real bank will not ask you to move money to a safe account that they provide. And a real bank won't punish you for calling back through the official number you trust. Now let's talk about what to do today. In normal sentences, no complicated steps. Turn on account alerts for deposits, withdrawals, and transfers, and make sure they go to the phone and email you actually use. Check that your bank has your current phone number, your current mailing address, and an email you can access without help. Decide right now that you will never share a one-time code with anyone, even if they sound professional and even if they know your name. Write down the official bank number from your card in a safe place so you can call back without hunting for it in a stressful moment. Here's another open loop reminder, phrased differently, because I want it locked in. That small detail isn't a secret regulation. It's your personal rule. You initiate the contact, not the person who interrupted your day. That one habit prevents the most common benefit-related scams from ever getting traction. And it makes any security threshold, whether it's $250 or something else, work as intended. Let's recap what this means for 2026. Without guessing at details, you should personally verify. Security monitoring is expanding because fraud is expanding, and seniors are often targeted because deposits are predictable. A $250 range is commonly used as a meaningful trigger for extra attention on unusual movement. This doesn't automatically mean cuts, fees, or restrictions on your benefits, but it can mean more verification when something looks unfamiliar. And the safest response to any alert is to slow down, refuse to share codes, refuse to click unknown links, and call back using the official number. Attention reset before we close, because the ending is where people finally feel calm. You don't have to outsmart scammers. You just have to stop playing their game. They want speed, you choose pace. They want isolation, you choose verification through official channels. As you move through the rest of this year and into 2026, keep your money organized in a way that supports you. If it helps, consider separating bill pay money from spending money so unusual transfers stand out faster. Consider keeping a simple monthly pattern, because consistency makes unusual activity easier for you and for the bank to spot. And if someone helps you with finances, agree in advance on what's normal, so you're not surprised by a legitimate transaction that looks unfamiliar. Surprise is where both scams and confusion live, and you can reduce it dramatically. If you got a message today claiming a $250 transfer was flagged, would you feel confident enough to hang up, call back officially, and stay in control? One more practical reminder, because this is where seniors get targeted hardest. Never share verification codes, even with someone claiming to be the fraud department. Never click links from unexpected texts or emails, even if they look like your bank's logo. Never trust caller ID because it can be faked, and never let a caller keep you on the line while you log in. If you feel rushed, that's your signal to stop, breathe, and switch to your callback plan. Now the final recap. In clean words you can remember. A so-called $250 rule usually points to increased monitoring of unusual transactions, not a change to your benefit eligibility. The risk is not the number itself. The risk is reacting to a fake verification request the wrong way. Your protection is alerts, updated contact info, a strict no-codes shared rule, and calling back through official numbers. And the biggest win is building one steady routine you follow every time, so you never have to guess under pressure. Here's my final warning, and I want it to land without fear, just clarity. The next wave of scams won't look like a stranger asking for money. It will look like help arriving at the perfect moment. But here's the hopeful line that gives you control back. If you slow down and you choose the direction of contact, you can shut most of it down instantly. You worked too hard for your benefits to let urgency steal them. Do you want me to make a follow-up video that walks through the exact words to say when you call your bank back so you feel confident every time?